On today's episode of the Cryptoverse, we're going to do our daily check on the growth of the Lightning Network. We are going to look at the Bitcoin price chart and have a look at this double bottom pattern that I can see here, and the cryptocurrency gradings from the Weiss Ratings agency are out. So we'll take a look at those as well. All of that on today's episode of the Cryptoverse, so stay right there. Hi there guys, welcome to the latest episode of the Cryptoverse, your regular dose of news and commentary on Bitcoin, cryptocurrencies and blockchains. I'm your host, Chris Coney. So a new daily segment is the Lightning Watch. The Lightning Network is Bitcoin's hailed scaling solution, and it is live. It's live on the main network. It is growing by the day. Now, unfortunately, the old Gaben.win website is not working today. You can see the Cloudflare thing is telling us that the site is down, so we can't get the lovely spider graph mesh network thing that we get on a normal day. So we'll just have to use this backup, which is the P2SH website. So today's stats, according to my little spreadsheet here, are the capacity of the Lightning Network has now increased to 299 million Satoshis, which is 2.99 Bitcoin, roughly about $33,532. I've implied the number of nodes here to be 213. We can't find that out because the Gaben.win website is down, so I've implied it based on the growth on previous days. We're adding about 35 nodes per day on average, so I've just added that on. Anyway, the long and the short of it is, today we have an 11.65% increase in the capacity of the Lightning Network on the main net. So unfortunately I wasn't able to get those node numbers, but it's good enough. Now, as a mild curiosity on top of this, if I hop over to btc.com, this is a mining pool that provides some of these network stats down the bottom right hand corner here. The pool of unconfirmed transactions is sitting at a mere 102 megabytes and 35,000 transactions right now. That's the lowest I've seen it in a little while. Now, I know mentioning that on the back of the Lightning Network kind of implies that it's the Lightning Network that's lifting the burden on the Bitcoin network, but honestly, that's not what I intended it to be. I don't think that's the case. I just find that as a appropriate place to put it in the show because we were talking about Bitcoin, right? I don't think there are a lot of real transactions going on Lightning because it's still experimental, and most of those nodes that are connecting to the Lightning Network right now are doing it for experimental purposes. So they are risking their real Bitcoin on highly experimental technology, but that seems to be a thing in the Bitcoin world. I mean, even the Bitcoin software is still technically pre-release software. It isn't even a version 1, yet we've staked $200 billion on it. I mean, that's just the way we get down, I suppose. Anyway, that's enough of the Lightning for today. Let's go on to the Bitcoin price chart, shall we? So what should we do? Let's do a big old where's the full screen button gone? They keep moving it around. Screw it. It was up here in the top right. They've changed the interface, but it's not there. So I'll just do it this way instead. So I'm going to do this. I'll do this with lines, and I'll make them reasonably thick. So the crash down from 20k, right? It formed like a double bottom. In fact, I might actually just clean the chart right up and get rid of all of my lines so I can just draw this purely. Right, there's a pure chart right there. So the crash down from 20,000, it kind of went like this, right? Actually, I think I can turn off the extended setting. Yeah, turn off the extension. There we go. That's what I want. So that's the crash down from 20,000. And then if we draw another one, it goes from there to high. And then it goes from the high. I need to select the bloody tool again. To a low. And then to another high. So it forms this W-looking pattern. However, the key bit is that the second dip is higher than the first dip. So that's a double bottom pattern, which is ordinarily a reversal pattern. So this crash down from 20,000, right? When it goes up and down but doesn't go as low as it went previously, that's normally a sign that the crash is over and it's going to reverse into an uptrend. Unfortunately, in this case, the uptrend didn't hold past 17,250. So it then went for another dip, didn't it? Now, there's a fractal here. So this pattern here, crash down, double bottom, etc. Fake out back up to the upside. And then here we go again. Down all the way to the bottom of the recent crash. Then we have another fake rally. And then it goes for a second bottom, but is higher than the previous bottom. So again, reversal pattern, it would suggest to send Bitcoin back this way, right? See the fractal, the W and the W? But if this is a fractal, it means that this, let's see if I can draw this, this whole pattern will repeat itself, which means it will be a fake double bottom. And instead of going back to the upside, this uptrend that didn't sustain, if that repeats, well, it'll go up a bit. Let's see if I can delete this line. It'll go up a bit and then it will fail, right? If it performs exactly the same move, it will break the previous high. So it might go to, say, 13,500 or something. And then if it follows the same pattern again in a fractal, then we'll get this. You see what I mean? Because then it would be a perfect fractal. What's inside this circle? The double bottom, uptrend that didn't sustain, and then a new low. Well, same again. Double bottom, uptrend that didn't sustain, then a new low, right? That's purely based on the chart and the fractals, right? Purely on what I see on the charts, right? But like I said yesterday, external fundamentals are always at play, right? And that can mess with your technical analysis at any time. So we know the good or the bad news can have an instant effect on the market. And what happens in the real world has greater weight, clearly, than technical analysis, because not everyone is looking at the charts while everyone is looking at the mainstream news and the fundamentals, right? So that's just something to bear in mind. I'm not going to show any other charts today because they all pretty much have this same, double bottom pattern. And like I said, the double bottom normally signals a reversal, but like the one that appeared after the drop from 20,000, it did not result in a sustained uptrend. So who knows? This double bottom could be a full-blown reversal this time, or it could completely repeat this pattern and then lead us to a new low. And this may be where Mr. Crypto Investor YouTube channel is targeting like 8,000 or 8,300 to be a point where he wants to buy. So if this plays out in a pure fractal manner, we could see that be realized back to sort of 8,000, which would coincide with this previous line of resistance that was broken before we went straight up to 20,000. So do with that information what you will. I'm just offering it. I'm not giving you any conclusions. I'm just giving you my insight and what I see, and you do with it whatever you will. Now let's move on to the Weiss ratings. They're out. So a first note on why there was a delay in the release. They say here in their launch email that they came under a Korean cyber attack. In the second paragraph of this welcome email, it says their staff were up all night fending off denial of service attacks from Korea. And check this quote out from Martin Weiss. Here it says, earlier commentary on social media, this is in Korea, expressed considerable fear we were about to release negative ratings on their preferred cryptocurrencies. Can you believe that? Well, I can believe that, because money literally makes people crazy. And I've never seen that more sharply than since I got into the cryptocurrency market, right? While we humans, we don't live on the African savannah anymore, fighting for physical territory and then material resources. I suppose we do on a grander scale, but I'm talking about on the individual level. Those biological and psychological needs, they're still there. The mechanics is still there, right? So all we've done nowadays is mapped over to so that territory becomes, for example, our office, right? So you have territory disputes and office politics. So that's the same sort of territorial behavior in the office. And then in terms of material resources, like fruit we picked off a tree or a dead animal and so on, it's now money, right? So unconsciously, if you perceived that Weiss were about to do something that reduced the value of your crypto, well, that would be processed psychologically as them almost running over and trying to steal a pile of food that you'd stored for the winter, right? And this is the primitive brain, part of the brain that we still have. That's still operating. We might think we're conscious, but we have a three-layered brain, a very primitive reptilian brain and the cerebral cortex, which is the thing that gives us self-awareness. But those other parts are still there, and they're all talking to each other at all times. So we still have an animal part to our nature. Now, personally, I am the target of this sort of behavior sometimes. All I have to do is say something mildly critical about a coin, and then the holders of that coin come out of the woodwork and start attacking me as if I was intentionally trying to steal their pile of fruit, right? Anyway, that was just a quick philosophical segue to explain this behavior with the cyber attack. But that's what you get on this channel, so that should come as absolutely no surprise. So then moving on with this email, it gives a sample of the ratings, which obviously this email is free, but it gives some examples like Bitcoin got a C+. It says it lost points because, quote, Bitcoin has no immediate mechanism for promptly upgrading its software code. Close quote. I would say to that, pardon me, do they not watch the Cryptoverse? Do they not see the Lightning Network has been growing by more than 10% per day? Well, obviously not. But even then, they would argue that that's not a, quote, immediate solution. So I'll give them that one. So like I say, the email was free, of course, but the annual membership for the crypto rating service is $468 per year. Now, because I have the material resources provided by my loyal patrons, I was able to sign up for this service without hesitation. So the utmost appreciation goes to all of you good patrons for allowing me to take advantage of these kinds of opportunities immediately. Now, Weiss does point out that their rating system differs from the way that other rating agencies do it. They do things like AAA, AA, A, B, etc., which to me that's absolutely ridiculous, and it smacks of like psychological delusion, or what I would call mental masturbation, since everyone could end up in like the top 3 categories of AAA, AA, and A. If that's the case, why not just have it as A, B, and C categories, right? Well, that is the approach that Weiss have taken. It goes from A to E, and then F is a signal for fraud. So A is excellent and E is weak. A is also a strong buy. B is a buy. C is a hold. D is a sell, and E is a strong sell. Nice and simple, just what this space needs, although maybe a little bit too simple, which I'll talk about in a minute. Let's look at the data. The only thing they provide is the rating, with no depth at all. Right? Martin Weiss, when he went on the TV, I think he was on CNBC or something, he talked about the 4 categories that the coins get assessed on in order to arrive at this final grade. But they don't even include that one level of detail as to how they arrived at the grade. Right? Remember, the categories were risk, reward, technical, and fundamentals. So Martin, founder of Weiss Ratings Agency, if you're watching this video, please can you upgrade this report to at least include the scores in each of those 4 categories. Please do that for us. Right, in terms of the results themselves, there are about 60 coins on this list. It's in alphabetical order, and would you believe it, EOS and Ethereum are in the class of their own, with a straight B rating. They are the only coins that scored that high. Right, no one scored an A, and no one scored a B plus either. The next tier down from that are your B plus coins like Cardano, I believe got a B minus. There's Cardano with a B minus. You've got Neo scored a B minus, and also Steam scored a B minus. So they're the only 3 coins to score a B minus. So this basically means that those coins are the only ones that are considered a buy or a strong buy. So the strong buys are EOS and Ethereum, and the regular buys are, well, they're still strong buys, but they're in the lower third of the strong buy, would be Cardano, Neo, and Steam. Turns out I was right from 2 days ago when I said EOS was going to be an A or a B. I predicted that. But I'm still surprised it didn't get a B plus, right? But this is why I want the ratings broken down just a little bit so I can see where they think EOS is failing, you know. But anyway, other than that, everything else is considered a hold or a sell. And most of them get a C or a C plus or a C minus, so that's that. Now, of course, these grades, they're only true as of today, right? In the welcome email that they sent to me, they said they'll be upgrading these grades or updating these grades every Friday. So let us see how these change over the coming weeks, shall we? Alright, thanks very much for joining me today, guys. If you like this episode, go ahead and hit that like button. And if you're new around here, get subscribed. And if you would like access to my very best material, head over to my website, which is Cryptoversity.com. Click on the courses button and you can take any one of these online courses, or if you scroll all the way to the bottom, you can see a couple of live workshops that are coming up very, very soon. There's an evening talk on the 3rd of February if you want something simple and cheap, or you can go for a one-day crypto investing workshop, which is a week later. They're both in London, they're both in February, coming up within the next few weeks, so head on over there if you'd like a ticket and learn from me in person. Also make sure you follow me on Steam. Oh dear, I've not got the Steam website, I beg your pardon. So steemit.com/@marketingmonk. The reason you might want to come over and comment on my content there is that if you leave a good comment, good contribution to the discussion, then I will upvote your comment and you'll get some cryptocurrency rewards for that. You can already see here, this person got a 35-cent tip for their comment, 10-cent tip, 2 cents, depends how good your comment is, depends how much you get for it, but at least you get something for it, which you don't on YouTube. So come over to Steemit, follow me on there, and then earn some cryptocurrency for your participation in the discussion. Other than that, guys, that's all for today. I'll be back tomorrow with another episode of the Cryptoverse. So until then, it's me, Chris Coney, saying bye for now.